Thank you for tuning in. Andreas from Simply Explained here, and in this video we're going to cover Intel Corporation. Alright, so for those of you who are not familiar with Intel and what they do, I've summarized their business on this slide and how they divide themselves. So you can pause and read that if you want to, or continue to listen while I present the topic for this video further. So in the next slide we're going to take a look at the strengths of Intel, and then we're going to take a look at risks, and after that I prepared a quote from AMD about Intel that I found very interesting. Then we're gonna go into financials, more specifically some look at revenue and the amount of shares out there in their fleet. They've done some buybacks. And also cash flow from operations. After that, a quick slide about their future focus areas, and then I'm going to finish it off with some projections about future dividend and also some closing thoughts. But those are my opinions, those are not written in stone, do your own research, etc. Alright. So if you finished looking at the slide, let's go to the next one, otherwise you can pause. So, strengths. It's a growing market. They penetrated the PC-centric business, and they've also been successfully in migrating to a data-centric business. Very cheap in terms of price to earnings ratio. They have a strategy in place and very solid financials. Alright, let's move on to risks. Even though the market for microprocessors is growing, I've seen that Intel are losing shares to AMD and Nvidia and other competitors. And by other competitors we can say, for example, Apple. They made their own chip now, and I think that, well, we're gonna continue to lose to that, and also some others, smaller ones. But litigations as well, those are common for a company of Intel size, antitrust lawsuits, copyright infringements, etc. Some legal stuff there. Right, so something that I found very interesting here, because I got super curious about AMD when I researched Intel, I know, and I just had to have this quote in this video. And if you're doing something else right now and only listening, I will read the full quote for you. Alright, so here it comes. Intel Corporation's dominance of the microprocessor market and its aggressive business practices may limit our ability to compete effectively. Intel Corporation has been the market share leader for microprocessors for many years. Intel's market share, margins, and significant financial resources enable it to market its products aggressively to our targets, our customers, and our channel partners, with special incentives and to influence customers who do business with us. These aggressive activities have in the past and are likely in the future to result in lower unit sales and a lower average selling price for many of our products, and the adversely affect our margins and profitability. Alright, so not only adversely affecting margins, but also capital turnover rate as a result of fewer units sold. And I wanted to include this quote from AMD in one of the reports, because this really shows how strong Intel is in the microprocessor market, and they have a lot of time to make new innovations and take back the market share that they lost to competitors. Alright, anyways, let's look at some financials now. I'm just gonna move my video down here so you see the whole slide, and I'll move it back so you see me again in the next one. The focus areas is that's coming next. Anyways, financials. We can see that the revenue has increased, and the average for that was 3% year over year. So gradually increasing there. It's nice to see revenue growth, and the sector as a whole has been growing, so nothing surprising there. cash flows super strong, 5% year-over-year growth, and this is very nice to see. We've also seen some share buybacks, so the float of outstanding shares has decreased, and that's by 2% year-over-year. It's very nice to see. That's a very tax efficient way to do things. For example, only having dividends is taxed, and if you do share buyback, you boost the share price, and as an investor you only get taxed when you sell, but that's another story. But I think it's a very nice move by Intel. And of course, the price to earnings range and the 8 times multiplier there, it's a very attractive evaluation. Alright, you can pause and look on the numbers if you want to. Post questions about them in the comments below if you're curious about something, and I will answer. Alright, let's move on to future plans. Their priorities. Where are growth gonna come from? Well, they see continued growth in the areas of cloud service, IoT, AI. They've done some acquisitions, 5G, intelligent edge, all these buzzwords, as I call them, for people in the IT industry. That's the talk, that's the digital transformation right now, looking into, and of course Intel want to be a part of all different areas, and whether they're gonna be successful or not is a different story, but they have a clear strategy in place and they know where to focus. So I like to see this. I think they are very on top of things, and it's a growing market, and I hope they take some shares in it. Let's look at the dividend. So I made some projections here on the year-end payout one, using 7% constant growth rate. And please note that this is just my estimate. There's no guarantee this is gonna happen. It's just speculation. Then we can look at what the dividend would be. So very attractive, and 6 years of continuous dividend growth at this time. Also very nice for the value investors. They love this, and hopefully we will see continued growth for those invested for that reason. Alright, so you can pause if you want to and look at dividend growth over a period of years, or we can continue to the next slide with some closing thoughts. Alright, so some positives first before I comment some negatives, because I have both. And of course, a really strong value play. Some of us are value investors and want some safer bets, more defensive bets, but with a strong potential for some growth in the dividend. They certainly have that. Payout a bit low. A very long-term hold. It could be good to enter right now, especially if dividends will go as projected, but you never know. And please supplement this video with your own research. There are always more risks. There could be strengths that I overlooked, and just in general it's very smart to focus on opposing views and not just click on videos that validate what you already thought. Personally, I follow a lot of different YouTubers talking about finance to get a lot of different views, and I like that thing. And I recommend that you do the same. Alright, so am I buying Intel? No. No. I like Afria and Magnite more. I'm young, fairly young as you see, and I want to invest for growth. I want to see a company that does not pay dividends because they have interesting investment opportunities for themselves. They feel that they can invest back in their business and gain a better return on that than the market, and thus choosing not to have dividend. So I like Afria and Magnite more, not buying Intel, but it was fun to look into them and do some research on them. And as I always say, invest safe, and I hope you make a lot of money, my dudes. Because as the statistic here shows, this is Swedish, it means woman, and this is, well, man. I have 100% male viewers. So I hope you make a lot of money, my dudes.